Welcome to This Week in Money. I'm Jim Goddard. Today, Bob Hoye from chartsandmarkets.com runs down the action on the major markets. Are upstart day traders still trying to influence heavily shorted stock as the Dow and S&P hit new highs? Lumber appears to be building higher. Eric Hadik, president of InsideTrackTrading.com, looks at how trading cycles might have been influenced by so-called Robinhooders and takes a look at gold, silver, the US dollar, and Bitcoin. Do the planets affect financial markets on Earth? Ray Merriman from Merriman Market Analyst believes they do and tells us what geocosmic events could do to move the markets. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Golden Arrow Resources President Joseph Grosso. We'll talk to Bob Hoye right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to This Week in Money, Bob.
Yeah, Jim, and it has been an interesting week in the markets.
Did we see new records set on the stock exchanges this past week?
For the senior indexes, yeah, S&P and the Dow Jones are above what they got a couple of weeks ago. But if you look at the broader index, the New York Stock Exchange Composite, it is not. It set its high on a couple of weeks ago, corrected. It's coming off the low and it's probably going to test the high. We'll see how it does. But everybody watches the S&P, and it's made a new high, and as has junk bonds. Interested in risk is still there. And just let me see what the banks did today. Yeah, they were up hardly anything today, but again, their high was a few weeks ago, and the correction to support, and then the bounce in here. So I want to back up a bit, Jim, and say that we recall back in October, we noted that the stock market was oversold at a time when you couldn't have a seasonal low, and that it would rally. And then the other one was that we thought it would rally out to perhaps around January. And if it got speculative, it could be working on an important high. Well, my gosh, speculation has become absolutely wild with that GameStop and then the other ones that were being played on the short squeeze. So the main thing is that the stock market rallied when we thought it would. It has become very speculative. And here's one thing we want to look at for sure here is that if it hadn't become so overbought, then we would think it was on a methodical uptrend, that was still more up in it. But this thing has become hugely overbought, in which case it's a little more vulnerable than it would be if it had been just a nice, steady, methodical advance. So, but we're going to watch here. It could want to go up for a few weeks more yet. And, but against this, you've got the old observation that, when you have an up market for stocks and industrial commodities and things like that, it's usually a down for the U.S. dollar. And indeed, the U.S. dollar did sell off a few weeks ago down to 89 on the DX, and it's recovered. Got up to sort of 91.5 yesterday, and then was off a half today at 90. But when you look at the chart, Jim, gosh, that's been a very good run. And what we've noticed on the U.S. dollar index is that when it gets oversold on a drop, and this time it did get oversold against the right conditions, which was a speculative burst in the stock market. And the other one was that you can often have a seasonal decline for the U.S. dollar into January, which we got. So then we've had the rally, and it's having it was actually a very good rally. And so now it has to go down and sort of double check the bottom, see, it has to be tested. So, but what I usually like to see on the dollar index when it has been in a sharp decline is to get the oversold, which we've had, and then many weeks, like maybe 4, 6, 8 weeks of bouncing back and forth as it establishes a base. And so this had the oversold, and it had pretty good rally, but it's now going to go down and check the action, and this would be a very good setup for extending the bottoming pattern. And then we have a moving average that we like to watch, and it's the 20-week exponential moving average. And when the dollar index moves above that one, that says that the bottoming pattern has been completed. And actually, we're really right at the 20-week. So it's going to correct for a bit in here, and I think extend the base building. And then now, what you want to watch is that in previous intermediate corrections in the stock market, or if it's been a hot commodity market, the U.S. dollar can advance for quite a bit. So, and we note that that let's call them the inflation crowd that really doesn't understand inflation and financial assets has been looking at it and expecting commodities to fly, inflation to come back because the Fed is doing reckless. It's been reckless. And then with the new socialist administration at both the executive and the congressional level in the states, that there's even more impetuosity in being reckless, and therefore we're going to go into 1970s type of inflation. And I kind of doubt it, because the game still is to inflate stocks and bonds. So it might be a transition. So we're watching for the excesses that are developing in stocks. We've had a nice rally in copper. It became a little overbought, and then because of unusual things going on in the U.S. residential housing market, the price of lumber has gone crazy, up to over $900 for a 2x4. No, it's related to 2x4s. And that's due to this revulsion of ordinary people looking at the downtown cores of mainly Democrat cities that have gone out of control. Violence, arson, trashing are allowed, and they're still happening in Portland and Seattle. So people are moving away from downtown cores and into more rural or suburban areas. So that's taken the bid out of downtown, and so rents and condo units prices are falling in the downtown cores, and that's put a hell of a bid into real estate wherever it's going. So with that, people are buying a house, renovating, which often takes more 2x4s, or the contractors are building new ones, which still takes more 2x4s. So it's been a very interesting market with this. You've had, since March, the dreadful policy of lockdowns, and that put into the market the worst ever slump in employment ever. At the same time, when the stock market and the economy might otherwise have been booming. And so you got a kind of a weird economy, but I'll tell you one thing, the stock market has gone beyond weird. But when stocks get this speculative, it is close to a peak. And I'm telling you, you do not get this kind of speculation at bottoms. So we're going to watch and see how it all turns out.
Bob, if anybody has questions for you, they can send them to info@howstreet.com, and you'll answer them during your regular podcast on howstreet.com. And we really appreciate those questions.
Yep, sure. Always welcome some questions.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Our conversation took place after the markets closed on Friday. Coming up, Eric Hadik next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Eric Hadik, CEO and president of InsideTrackTrading.com. He's speaking to us from the Chicago area. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, can you tell us a bit about your newsletter and how people can subscribe?
Well, we offer a couple different publications, a weekly and intra-week one, monthly and intra-month one, and then various types of special reports supplementing that. But all of it is focused on on technical and cyclical analysis of the markets, and listeners can find out all the information they should need to get a better feel for it, and also view a lot of samples posted on our website at InsideTrackTrading.com. That's inside with the extra I in the middle, so it's INSIIDE, tracktrading.com.
Eric, I've always been curious why the extra I.
The word inside is actually an acronym that really was the original focus of, and still is the focus of, the newsletters, with each letter representing another sector of the market.
Are the Robinhooders and short squeezes causing disruption in normal market cycles?
Well, there you're dealing with very short-term types of moves, and obviously, at least right now, it's been isolated to a few stocks like GameStop and AMC, and I think Cost was also in there. And there was some speculation that the recent surge in silver late last week, early this week, was also linked to a lot of the Reddit traders. But other than very short-term anomalies that are caused by that, I have not seen anything that really has altered intermediate or larger magnitude cycles.
We're hearing rumblings the Dow is about to top. What do you see ahead for the Dow?
Well, I think the Dow on an intermediate basis, and I would classify that as 1 to 2 months, did top in January, back in late October, early November. I know we were talking about this, and I also put out publication for my readers in the very beginning of November, where industrials was showing a bottom, and that all of my work was projecting a sharp rally from what was then the Dow trading at about 26,500 into the end of the year, and potentially extending a little bit into January. But the real key takeaway from that report, which I would again offer a free copy to any of your listeners if they contact us, but was that the Dow Industrials should surge up to 31,300, where this very uncanny and synergistic convergence of upside targets and resistance levels was coming together, and and pretending an intermediate top at that level. And sure enough, the Dow surged through November and December, and then spiked up to just above 31,200 in January. I think its intraday peak was 31,272, so it came within 28 points of that target, which is good enough for fulfillment of that level. And from there, what I was expecting and still expect was some volatile action in more of a sideways trading range, a little bit like what we saw in September and October. But I do think that the equity markets are going to still see another move up into May or June of this year. At that point, depending on price action, the levels that we've reached, the wave structure leading into it, and a host of other indicators that I look for around major tops, I will be certainly seeing if they're coming together and if we are setting up for a 3 to 6 month or longer peak at that time. But for now, I do think there's another leg up coming in stocks.
Is the Russell 2000 an important market to keep an eye on?
You know, I wrote about that back in late March, early April, and several times since then, where I thought that as you progress through a new wave up, 1 to 2 year cycles had bottomed in late March, and that's when I was looking for an overall move up into May or June of 2021. I explained why I thought that we would see that coincide with an inflationary move in a lot of commodities, a lot of other markets. But as we saw the first leg up into August, early September, I was looking for a transition at that point and explained why I thought that the Russell 2000, the S&P Mid-Cap 400, and similar indexes and stocks would begin to take the lead from that point forward, and that we would see them in moderately stronger position, proportionally speaking, to some of the large cap indexes and stocks. So I do think it's a very important index to keep an eye on. And the other thing is that it's always a good indication of intermediate tops when you start to see these divergence where first a leading index on the way up might top, or one that's showing a little more relative weakness, I should say. And you get a sequence of short-term tops, but at each one, less stocks or indexes are advancing to new highs, while as others are confirming a top and slowly rolling over. And so that's one of those things, too, where, for instance, you saw the Dow and the Dow transports, even more so, showing signs of a top in January and then seeing an initial sell-off. They've rebounded and are still a bit lower than their January peaks, whereas other indexes are already spiking to new highs. So you get that type of divergence setting up, where watching something like the Russell 2000 as well as the comparative indexes gives you some early warning signs of intermediate turning points. So yes, I do keep focus on that. And like I said, I thought that this remaining 6 months or so from early November into May or June would be led more by smaller and mid-cap stocks. So that's certainly going to be an index at the forefront.
If we do have a correction in May or June, how big will it be, or can you tell?
It's difficult to tell right now, but based on the magnitude of some of these cycles and where we are in the wave structure in at least some of the indexes, I think it could be a much more significant top and a sharper or larger decline than we have seen in the year or so leading up to that point. And the question to me will be whether I think it can match or exceed what we saw early in 2020, and that's still to be determined.
How's gold looking short and longer term?
On a short and intermediate basis, gold remains in a corrective period. I've described this for actually a couple years now, but really honed this focus in recent months, where coming into 2020, I felt we were going to see two key peaks in 2020 and one final one in 2021, and that would culminate the 5 to 6 year bull market in gold. And those peaks were anticipated in March of 2020, August, September of 2020, and in May of 2021. And I also explained why I thought that the valley between those final two peaks, the one in August of 2020 and May 2021, should be a much deeper and more prolonged correction, which is there's an indicator that I describe called the foreshadow signal, which is an important foreshadowing of a major top to come. So gold has fulfilled that, and it's been in a corrective phase since August. I think it probably has one additional spike down to at least the 1735 level, and that should be seen in February, ideally by mid-February. But then it would be set up for a final rally, probably back to new highs leading into May. And then similar to stock indexes, although the timing could be offset a little bit, I think we'll see a pretty major peak in gold in the second quarter of this year.
Could silver have just put in a double top at $30?
I think on an intermediate basis it certainly has, and that was the most obvious resistance point when you had this 3-day surge in silver late last week, early this week, which, as we discussed a few minutes ago, was at least partially attributed to Reddit traders and the like. But you had silver, was kind of consolidating there around $25 to $26, then does this 3-day surge and stops right at the August-September peak. And then before you know it was back down to $26 in 3 days. I think that as I said, is an intermediate peak, but I do think that silver is going to exceed that and probably exceed it before gold and some of the other metals head to new highs. I think that silver continues to be the leader in precious metals since late March of 2020, and will continue to be.
We'll have more with Eric Hadik right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Eric Hadik. Eric, what are you seeing in the gold and silver stock cycles?
Gold and silver stocks, the XAU index, the HUI, Gold Bugs index, they are certainly moving similarly, and there are similar expectations as in gold and silver, but the magnitude of those expectations is often the important distinction. And I continually am stressing this and getting questions about it from readers. The idea that people that are traders that are focusing on that need to remember that a gold stock is not just gold. And in fact, it's more of a stock than it is of gold. So yes, it's going to be influenced positive and negatively by the price of gold, but there are so many other factors into making a company profitable and the shares of that company an appealing investment, that it often has some serious divergence from the price of gold and silver too. And I often point to, when you're talking about very significant turning points, you look at something like 2010, 2011, where the XAU index rallied from 2008 up into 2010 and spiked a little bit above the highs it had set in early 2008. Even as gold, that was the biggest proportional move in gold and silver occurred after the XAU peaked. The XAU peaked in December of 2010. Gold didn't peak until September of 2011. Now, you did have similar rallies and diverging peaks in the XAU, but if you were expecting moves that were even remotely close to what you were seeing in the underlying metal, you would have been greatly disappointed. And that's often what you see in the gold and silver stock prices, that you need to be aware of what the overall stock market is doing, because that has a more proportional impact on gold stocks. There are even times when you might have the overall market tanking and gold kind of pops higher on a safe haven status, but gold stocks don't know what to do because their stock value is being pulled down as their focus on gold is trying to support them, and usually the stock part of that gold stock wins out. So I do think that the XAU index and gold shares are going to trade in similar swings as gold, and that we will probably see an additional spike low in February and then a rally into May. But based on some key indicators that I'm going to be watching over the next 2 to 3 weeks, I'm yet to determine whether I think the XAU can make it to new rebound highs above its August 2020 peak near 165, or whether it is going to be on track for a lower high in, say, May. That's the ideal time frame, but May of 2021 this year. And that could be an early warning sign, or the canary in the coal mine of a peaking market in the metals.
Is the U.S. dollar cycle turning bullish?
I think that the dollar is on track to bottom here in the first half of 2021, but right now I think we're only seeing a short-term bounce, something that is expected to last 1 to 2 months, and then I anticipate seeing the dollar go back down and probably spike to new lows before a more significant bottom is intact.
How are interest rates looking?
Well, from a long-term perspective, I keep going back to the very consistent, almost uncanny 4-year cycle in the Treasury bonds and Treasury notes. And that 4-year cycle, which had previously peaked in June, July of 2012, June, July of 2016, was expected to set a multi-year top in June, July of 2020, and that's exactly what bonds and notes did. And I think you're in that phase now where probably for what I was expecting was about a year of some consolidation near that top in bonds and notes before you see a bit more of a significant downturn in those markets, which would imply a little bit of an uptick in interest rates in the second half of this year and possibly into 2022.
What's the latest on crude?
Crude remains in a pretty strong 3 to 6 month uptrend, and most recently it triggered another intermediate buy signal at the end of January and was projecting a quick upswing into mid-February. But on a little bit broader basis, I continue to look for the energy markets, the energy complex, to head higher into April or May of this year, and my primary upside target for crude is $60 to $65 a barrel. And so everything is kind of in that context where energy markets are right now. In a little bit of a contrast to that, I think that natural gas recently put in a secondary bottom a few weeks ago, and I think that's actually on the beginning end of what could be a 6 to 12 month uptrend.
Do you have any idea what's going on with natural gas?
Well, obviously we've got certainly some colder weather moving across a chunk of the U.S. and Canada in recent the last week or so, and that has helped spur this latest bottom in natural gas, and I think is going to trigger a sharp rally into mid-February. But it has been depressed for so long leading into early to mid-2020 and had reached multi-year, multi-decade support that it couldn't help but bottom in there and start to turn up. But it was interesting, too, because even in the second half of the summer last year, when the trend was already starting to show some bullish tendencies, you had weather play a role there, too, where there was so much heat and the resulting use of energy that many of your power plants had to rely on natural gas to supplement their energy producing needs. And so you get these demand surges or spikes in natural gas both in the dead of winter and often in the harshest part of summer. And I wouldn't be surprised to see that be part of the motivating factor for this uptrend that I expect to see last from beginning of 2021 into early 2022.
What's going on with Bitcoin?
Bitcoin is just continuing to demonstrate the shift that is likely to continue going on between fiat currency, your hard currency, and now digital currency. And back in September, October, I was explaining this pattern that I look at where a market is preparing for an accelerated surge. And Bitcoin was tracing that out in September of October, and then just took off from there. But also in that context, there was and is a pretty consistent 18-month cycle in Bitcoin that had timed a couple of its most significant turning points in June of 2019 and December of 2017, and that was telling me to look for the culmination of a sharp move up in Bitcoin to occur near the end of the year and it stretched into early January, which is not surprising. But I think that Bitcoin is now in a period of consolidation where it could remain. There's one trigger point that I've discussed with my readers, that if Bitcoin can trigger that, it could see a quick spike down to about 24,000. But right now it's really stuck in a range between about 40,000 and 30,000. I know that's a wide range, but on a chart on a proportional basis, it's not quite as significant, or on a logarithmic basis might be the better way to describe that. And it's been slowing its ascent, and I think that the rebound in the dollar that we've seen, and that I still think it has a little more upside, that might be one of the factors that puts a little bit of pressure on Bitcoin. But I think that Bitcoin could see another, and the cryptocurrencies could see another advance later this year.
Do you have an update on food shortages, and the agricultural cycles?
Some of your key grains, soybeans, corn, wheat, are fulfilling some much longer-term cycles. And I think that we're seeing a culmination of one phase of those, but I think there still is probably going to be another phase later on this year. But I've described in soybeans this, they've got this very consistent, and this is going back 40 to 50 years, very consistent 4-year cycle, an overarching 8-year cycle, and an even larger magnitude 16-year cycle. And that 16-year cycle and the 8-year cycle time these parabolic moves that you see in soybeans. And I trace that back to 1972-73, where soybeans had this parabolic advance, tripled or so in price. And then you saw similar moves on a 16-year interval that were focused on the second half of 2020 for something very similar. And breaking it down to the 8-year cycle, the most recent phase of the 8-year cycle had seen a big rally in 2012, where soybeans rallied for 8 months, and about $7 per bushel. And if the current rally was going to match that move up, soybeans needed to rally into January of 2021 and approach $15 a bushel, and they rallied into January and spiked up to about $14.50. So they were very closely matching exactly what you saw 8 years ago, in line with that 8-year cycle, and having this near parabolic advance or accelerated advance like you had seen in sync with the 16-year cycle. And I think that too is part of this inflationary cycle that I've been talking about since late March, early April of 2020, and that I think is going to continue in 2021. Now, I do expect wheat to start to overtake, become more of the leader in that, at least in that trio of grains. And wheat has set up a certain pattern that is a little bit like what I was describing in that took hold in Bitcoin back in September, October. I had previously described the same indicator and a similar setup in soybeans back in July of August of 2020 that were setting the stage for this accelerated advance. And now you're seeing something in wheat start to unfold similarly. So it wouldn't surprise me to see wheat have some pretty strong advances in the next 3 to 6 months, with a primary 3 to 6 month target up around $9.50 a bushel, which wheat currently is about $6.30, $6.40 a bushel. So I think it has some serious upside potential over the next 6 months.
Eric, where can people subscribe to your newsletter?
Well, as we were discussing in the beginning of this discussion, the best place is at our website, InsideTrackTrading.com. It's INSIIDE, TrackTrading.com. There's a pretty comprehensive description of each of the different publications, order links there, and also contact link where you can contact us and request samples and a trial to our different publications.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and President of InsideTrackTrading.com, Inside spelled INSIIDE. He was speaking to us from the Chicago area. We'll go southwest to Arizona to talk to Ray Merriman right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Ray Merriman. He's the founder of Merriman Market Analyst and the author of several books on the correlation between market cycles and planetary cycles and other things going on in the universe. His website, MMAcycles.com. He's speaking to us from the great city of Scottsdale, Arizona. Ray, welcome back to This Week in Money.
Thank you. Thank you, Jim. It's a pleasure to be with you. Thank you.
Ray, you have a big event coming up. Can you tell us about it?
Yes, it's our annual forecast for 2021, our worldwide webinar. And it's going to cover national politics, global economy, and global financial markets. It's our biggest event of the year, Jim, and it takes place on Sunday, February 14th at 2 p.m. Eastern Time. That would be 11 a.m. Pacific Time, your time. The cost is $55, and if people are interested, they can read more about it and sign up on our website. Just like you said, MMAcycles.com. That's our website. You know, I want to say one more thing about it too, Jim. In this webinar, I'm going to be covering the 3 most important geocosmic time bands of this year, 2021. These are the ones that have the highest correlation to trend reversals in intermediate, long-term trends in financial markets for 2021. And so that'll be of interest. That's always of interest to our listeners, to our readers, to our subscribers, because we are known as market timers. That's our specialty. So these time bands are important to our clientele.
How's your new book doing, and where can people get it?
Well, the new book is Forecast for 2021. It came out the first week of December. They can only get it through us. We don't deal with secondhand distributors unless you're talking about a different language. We have several different translators overseas. But they can get it at our website also, MMAcycles.com. Just go to shop and then books, and it'll be the first one listed there.
Ray, can you give us a quick thumbnail on the relationship between the financial markets and astrology?
Sure. So in its purest application, astrology is the study of the correlation between cycles in the cosmos and cycles in human activity. So when cycles between planets take place, known as conjunctions, or we call synodic cycles, that correlates oftentimes with the start of cycles in human activities related to those, the dynamics of those planets involved in those cycles. Now, oftentimes those planetary cycles have a direct relationship to reversals of trends in financial markets. Not always, but about 80% of the time. So So it's important to understand that planetary movements don't cause changes in financial markets. They correlate mostly with changes in human activities. They may be the result of an event, a decision or a choice, or an act by world leaders. It doesn't matter in this study what the cause is. We don't always know ahead of time what will cause a change in the direction of human activity that then indirectly may affect financial markets. So what's important to us is that the change occurs almost synchronistically to a planetary cycle or phase of that planetary cycle, which are known as aspects between planets. Now, I can give you an example. We all know about new moons and full moons. Well, in the study of astrology or geocosmic studies, new moon is the start of the cycle. That's the conjunction between the sun and the moon. They come together, a synodic cycle. The full moon's the halfway point, so that's the culmination of what started at the conjunction. So that's the second phase of the solar lunar cycle. And we notice changes take place, modest changes take place in financial markets around the new moon or the full moon. But more often you notice changes in weather, changes in collective psychology. That's what's going on. But the lunar cycle is a minor cycle. It's a minor geocosmic cycle. It happens every month. We're more concerned about the outer planetary cycles, the Mars, Jupiter, Saturn, Uranus, Neptune, Pluto, when they come together, when they form direct relationships with one another. Those types of cycles last years, even decades, even centuries in the case of Neptune and Pluto. So the rule is this for us. The longer the planetary cycle that takes place, the greater the cycle in human activity that's also taking place around that time. And I can give you more examples if you want, but that's the general idea.
Ray, now we've heard the term astrology and geocosmics used. What would you prefer and what's more accurate?
Well, I prefer geocosmics because people think of astrology as signs, like Aries, Taurus, Gemini. And those things have very little connection to what we do. We're more interested in planetary mechanics. When planets come together, when they're opposite, when they form the quarter cycles, those are when the big events take place. The constellations may indicate, have a slight influence on trends, but really, constellations are a minor part. So we prefer the word geocosmic studies because that implies, movement in the heavens, whereas the signs don't move. They're pretty fixed.
And I was going to say, stars billions, sometimes of light years away or millions, not really apt to influence things as much as giant gaseous planets that almost turned into stars on their own.
Absolutely. I mean, we're part of a solar system, and we're part of a solar system where the planets in our part of the universe orbit around the sun. So they're always changing the relationship to one another. But those stars that are millions of light years away, they don't move. They have very minimal, if any, effect. That's not the important thing to us. It's those planets that move in the foreground in our solar system and their relationships to one another. I'll tell you let me give you one example. The year 2020, we just came out of it, and I think most people would agree that was one of the most horrific years of history, right? It was a combination. It's the only combination we've had in over a century where three of the major long-term planetary cycles came together. Jupiter came together with Saturn, Jupiter came together with Pluto, and Saturn came together with Pluto. We haven't had that happen since the early 1980s. You know what happened in the early 1980s, early 1880s? That was the year of the last outbreak of cholera that occurred in Europe. Hundreds of thousands of people died. It was also the year that President James Garfield was assassinated, and so was Alexander II, Emperor of Russia. So it wasn't a great year in 1881-82, just as we have not had a great year in 2020 and probably the start of 2021. But these are cyclical. Each of the planets to themselves are cyclical, but three of them coming together is not cyclical. That is a very rare phenomenon.
Were geocosmics able to predict the Robinhooders and the short squeezes, the Reddits, the game stoppers?
Well, astrology can't be that specific. It's more, it deals with dynamics and psychological variables for the collective. But what it did forecast and can forecast, it's a timing mechanism. So it forecasts that the month of January 2021 would likely see events erupt that represent an assault on the establishment, the principles of democracy, and the values of free market. It was a period of, and it still is, we're not out of it yet, it's a period of great political division where there are threats of riot and the overthrow of governments, just as we saw in the United States last month, and as we're currently seeing in Russia. That part is forecasted, can be forecasted through a knowledge of astrology. So in a sense, you could say the rebelliousness of the young traders on Robinhood also shook the establishment. They shook the trading establishment, especially the professional hedging community. That was like a rebellion against the status quo, against the establishment. And it correlated with the reversal of many financial markets. We saw that in currencies. We see that in the cryptos, maybe even stocks, at least temporarily. So the point is that astrology or astronomical changes are not causal to changes in human activity or financial markets. It's a correlative phenomenon. They both happen close in time. When something's happening in the cosmos like that, in the outer planets, relationship to one another, something's happening on Earth in some sector of our human activity, whether it's finances, political, or nature.
Are geocosmics able to predict what happens with the Robinhooders and the short squeezers as we move forward?
Well, you really don't have to be an astrologer to know that, as you know, Jim. The hedgers are always going to win out in something like this. The speculative newbies, in the end, I hate to say it, but most of them lose big time. I would say 90 to 99% of them lose. They make a lot of money a person, they lose it all. It's very hard to win against the professional hedgers in the long run. So the rebellion, I feel, will be shut down. That's Saturn square Uranus, either by the hedgers themselves just running them out, or government regulators. So it's an ongoing clash all this year between government regulators, the establishment, and the individual's pursuit of freedom and desire to overthrow the authoritarians and the establishment. There will be victorious battles like you had last week in January with the Robinhooders, but I don't think it's likely they're going to win the war.
In our last interview, we talked about December 21st being a special date to watch. Well, did anything special happen around December 21st?
Not exactly on that date, but around that date, very definitely. That was first off, let's understand from the geocosmic point of view. That was the start of several long-term cycles related to the 20-year period when Jupiter and Saturn come together. So Jupiter and Saturn came together first time in 20 years, but they came together in a part of the unit of our solar system that's part of a bigger 200-year and 800-year we call elemental change of signs that commence them. So, for instance, what happened then? Well, you remember within a month of that time, that's when the electors of the Electoral College cast their votes confirming the election victory of Joe Biden. It was also within a few days of the Supreme Court ruling against the Texas claim of election fraud, basically negating President Trump's claim of election fraud and guaranteeing the presidency of Joe Biden. And of course, that was met with great outrage by supporters of Donald Trump, which then led to the assault on the nation's capital and the insurrection which led to the second impeachment of Donald Trump. All of that happened within 30 days, December 21st, when this powerful long-term planetary cycle began. These events are historic. They have bent the arc of history, setting a new precedent of distrust between the government and the people. A distrust that actually started with President Nixon back in the early 1970s, which is the last time that the same aspect between Saturn and Uranus came together. It was 46 years ago. So in retrospect, I would say the Jupiter-Saturn conjunction in the air element of Aquarius for the first time in 800 years got off to a big start, a huge bang at that time.
Are there more important dates coming up in geocosmic action?
Yeah. We've got, we call Saturn-Uranus in this quarter cycle phase all year from February through December. And the most intense times will be May and June, November, December. Those are the big reversal periods. And I'll discuss these more in detail in our worldwide webinar on February 14th.
We'll have more with Ray Merriman when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Ray Merriman. Ray, the Dow has broken 31,000 points. The markets, as we were speaking on Thursday, were setting new market records again in the U.S. What do you see ahead for the Dow?
Well, I think it does go higher in 2021, but consistent with this 11 quarter cycle of Saturn and Uranus, I am also expecting a 10 to 25% decline happening shortly, sometime by September, very possibly between April and June. In fact, even May and June if I want to pin it down a little further. So overall, 2021 appears to be bullish, but with at least two major declines before October. But I don't think we're going to see a decline like we saw in March. March of 2020. I don't think we'll see that coming up. So let me put it this way. With Saturn square Uranus until December 24th, 2021, there's a possibility we could see a powerful decline. The odds might be 25% that it's going to be bigger than last year, but I'd say the odds are 75% that we're not going to go back down there to the lows of March 2020 for some time. I can't rule out the possibility that we're going to start a long-term bear market sometime in 2021, but I'm more inclined to think we get a top, anytime now before March, April, and then a bottom between May and June, or maybe at latest early July, another rally to higher highs, and then we might start a long-term bear market that could go into 2026 to 28, or it's going to be a series of two things happening. We get a bottom in 2022, 2023, another big rally, and then the big one, the big bottom that I think everybody's looking for, I think that's in 2026 to 2028.
Gold hit new highs last year. Are we likely to see further highs for gold this year?
I think we will, but first we have to complete this 31-month cycle low that's due in April of 2021, give or take 5 months. I don't think that was the low in November. It's possible, again, I would give maybe a 15% probability that was the low. But we're going to test it. We are testing it again now. I think we're going to break it, and we're going to make a final bottom somewhere above 1,600. I don't think we're going below 1,600. And then we're going to move back up again and look at these, the 2,000 mark and maybe even higher by early 2022.
Silver hit $30 in 2020 and formed what could be a double top just this week at $30. What do you see ahead for silver?
Yeah, that was quite a move, wasn't it? Another Robinhood effort there. Well, my target was $33, give or take $3 this year. And we got to the lower end of it already. I think we got another push yet coming up. Maybe it's because of the Robinhood traders. If they can get above $36 an ounce, the sky is the limit. And here's the thing that concerns me, though. Silver always soars percentage-wise much higher than gold at the end of a long-term cycle. And that's what's kind of happening now. Silver's soaring, gold isn't. But once the high is in, which I think is in 2022, I think both of those markets, gold and silver, are going to collapse by over 50% by 2024 to 2025.
What do you see ahead for the U.S. dollar?
Well, it bottomed temporarily on January 6th and started a new, what we call a primary cycle that could last up to 8 weeks. Usually these rallies last 2 to 5 weeks, and this is week number 4 as you and I are talking today. So it's due to end in the next 2 weeks, and maybe it goes another month. I do have one concern, though, that has nothing to do with geocosmics. It has to do with cycles and politics. And that concern is that we now have a Democrat president in the United States. Democrats presidencies can be bullish for the U.S. dollar because the Democrats don't really care about supporting cheaper goods on international markets to help U.S. multinational businesses capture market share. They're more concerned about, keeping the value here at home. They want to make things cheaper for us who are importing from overseas. So that's the one thing that concerns me, and that's, again, the party in power right now, the Democrats, tends to be bullish for the dollar, not so favorable for multinational U.S. corporations.
How are other currencies likely to react to the U.S. dollar?
I think the euro, the Swiss franc look good. Maybe the yen, not so much, but I think definitely the euro and the Swiss franc. And I think Canadian dollar looks good, even though it's pulling back a little bit right now. And again, that pullback in the Canadian dollar and the euro and the Swiss franc, I think that's going to end within the next, I would say, 1 to 5 weeks. And then I think they're going to resume. And I think you're going to see the euro get above 130. And I think, I don't know exactly what Canadian dollar is going to be, but because I follow more of the euro. But I do think the currencies are good. If we start falling below 115 in the euro, I'll get worried. But until then, I like all the currencies against the U.S. dollar.
The Democrats are making noises about a special wealth tax on people making more than $50 million. Is that a concern to investors?
It's always a concern when you talk about raising taxes because, in my ideology, raising taxes starts a whole domino effect that eventually ends up in recessions. So yeah, it's a concern to me. I think you're going to see taxes go up, not just for the super wealthy. I think they're talking about anybody making over $1 million. They're going to, if I'm not mistaken, or maybe it's $10 million. They're going to have a wealth tax, and if it's over $50 million, it's a considerable wealth tax increase. So, I'm not in favor of those kinds of things. I think it's not good for the economy in the long run, but it is consistent with the ideology of the different political parties. And right now we have a Democrat political party controlling all of our government. And that's the way it is going to be for at least the next 2 years.
Well, isn't it true? Big money is super mobile. Who's going to stick around in the U.S. if they can go live and work someplace else and get to keep more of their money?
That's right. I mean, you see it happening on the state level right now. The states that have the highest income tax are losing people like crazy. Not California quite so much, but New Jersey, Illinois, New York, they're all moving to lower tax states. If they start raising the taxes too high, on the wealthy, yeah, they're going to leave. They're going to go to Canada. They're going to go to other countries.
You want to talk about tax? I was going to say, you want to talk about taxes. Canadians pay a whole lot more, but then we don't have to, but we do have government health care. When you factor in how much Americans have to pay for private insurance, you're taxed at a pretty high rate too. Yep.
When you add all the taxes up, we're going to be, I think, near, if not above 50% by the end of the year.
Any thoughts on interest rates?
Yeah, I think the bottom in interest rates is in long term. I think you're going to get a steady increase on the long end of the yield cycle, for the next 30 years. It won't be dramatic at first. But when we get to the end of the decade, I think after that you're going to start seeing it increase to the year 2050, and it's going to be much more noticeable and probably a little more painful.
Do you think we'll ever get to the interest rates we saw in 1980 where there were 21% mortgage rates?
Well, this is a Saturn-Pluto phenomenon now. Let's go back to geocosmics. Saturn and Pluto come together every 32 to 37 years. And when they come together, it's historic lows and highs. We had Saturn and Pluto together in 1947. Interest rates were about 0.25% then, too, in the United States. And then the next Saturn-Pluto conjunction was 1981-82. That was historic high in interest rates, just as you mentioned, 21%. And now we got another Saturn-Pluto in the year 2020, and they're back to 0%. So if you ask me, can they go back up again? Yeah, by the year 2050, they can get back up again to double digit, if not even to 20% again. It's very possible.
What do you see ahead for crude?
Much higher prices. I think the low is in that. When you see something... when you see something happen like we had in March, April of last year, when crude oil actually went negative, that's an indication of a very, very long-term cycle. We call that the 36-year cycle low in crude oil. And you're going to be up for at least 2 to 5 years in crude oil. And how much higher? Well, my minimum target, $70. I wouldn't be surprised if within the next 2 years we're back up over $100 a barrel.
What do you see ahead for grains?
Well, the grains are already fulfilling my forecast given in the 2021 book, and that would be the beans get into the teens. But I don't think it's done. I think if you go back and look at the last couple of years, you're going to see wheat, corn, and beans double their prices. You know, so I think you're going to see soybeans yet to get to maybe $17 or higher. My minimum target on wheat was $6.50. We're already there. I wouldn't be surprised if wheat even gets to the teens. Corn's reached my minimum target, which was $4.50 to $5. We're above there now. We could be at $8 within the next year. So as long as soybeans remain above $11.50, I think they're bullish. And I think this is a sign that we're re-entering inflation, just like we had in the late 70s, early 80s. And the food price will be one of the leaders of that inflation movement, along with energy prices. They're both going up much more, I think, than people are expecting. And you'll see this by the end of this year through 2022, I think.
What do you see ahead for Bitcoin?
It has support. I see support down to 20,000 to 25,000. I know the other day it got under 29,000. I don't know that that's the bottom. It could be. I'd like to see it get closer to 25,000. But I see higher prices there too into 2022 as inflation goes up. I think Bitcoin's going to go up too. But once we get to 2022 and we get this spike in inflation and Bitcoin, then I think Bitcoin's going to have a 70 to 90% decline the next 2 years after that.
Is there a lot of fear that governments are either going to regulate or ban Bitcoin and other cryptocurrencies?
Yep. I mean, I hate to say it, but, the government policies coming in, I think, over the next 2 to 4 years are going to be very interventionist. And that means you're going to have regulators. You know, there's going to be another era of regulators, just like we had in 2008 to 2016. I think we're going to get a repeat of that. And I don't think that's going to be helpful in the long run for the economy. Short term, they're going to get away with it. That's probably speaking too liberally, but they're going to get away with it because the economy is strong. There's going to be a lag time between the economy coming down and the negative effect, I would say, that you get from higher interest rates and regulations.
How does the U.S. economy look going forward?
Well, I think it looks good through September. I get a little worried after that. I think we have some troubles in 2022 and 2023, but the big problems are 2026 to 2029. The only concern I have is, are we topping out with the economy now and going to go down that long to 2026, 2029, or is it going to be in two ways? I kind of think it's in two ways. I think we're going to top in, later this year. We're going to go down in 2022, 2023, have another rally, and then big problems coming after that, 2026, 2029.
Do you have any suggested ideas on how you might protect yourself if there's going to be some major corrections happening in the market?
Well, I will always recommend to people when we have turmoils, when it gets crazy like it did last February, March, just cash in your equities. I wouldn't be in the stock market at that time. I would be in cash. I would try to diversify in different currencies, actually. I wouldn't be stuck in one currency like the U.S. dollar or Canadian dollar. I would try to get, some European currencies and Swiss francs in the mix there. We always say that when inflation comes, it's good to be probably into precious metals or commodities in general, and that's probably true. Probably true for the next year. But I think the best investment a person can make is is to get in cash when we get those turbulent times, invest your money in yourself, because if we do have the kind of trouble that I'm seeing in 2026, 2029, and maybe even 2022, 2023, if you got cash, you can help people out who are strapped because they're cash deficient. They're going to get margin calls. They need to sell things. So they're going to sell things at, discount prices. And those who have the cash who can afford it are going to be able to buy it very attractive prices in. And like all cycles, this too will end. Prices will go back up again, whether it's equities or commodities. But I think you want to have your quivers you want to have your arrows in your quivers ready to go when things do get rough, which I think they will at some point, and maybe 2 different points in this decade.
Ray, are you one of the firm believers that it's easy to make money in good times, but the most important thing is keeping your money in bad?
Yeah, I'm a great believer in that. I'm also a great believer in the fact that it's easy to buy, it's difficult to sell. People tend to stay in too long. So you're going to hear a lot of stories about all these Robinhood people in the GameStop and other things they invest in. You can hear these isolated events where, they made 1,000% on their investment. But what you aren't going to hear is the 95% of the people end up losing money in the end of these things. So my advice is, when you get a speculative frenzy like this, get out early. Don't wait too long and get out too late, because then you're going to have problems.
Yeah, I know in the movies, Robin Hood beats the sheriff of Nottingham, but in reality, when you go up against an entire army in a castle, good luck to you if you're armed with bows and arrows.
I should probably be a little bit more kinder to the Robin Hood people, because that really is the namesake of my surname. The Robin Hood and the Merry Men. We were archers in the service of the king, who would take the money that was the king thought was his and give it to the poor. So it's sort of, I got a little bit of a vested interest there in terms of surnames.
Ray, how can people find out more about Merriman Market Analyst and your new book, Forecast 2021?
Well, the best way is to go right to our website, Jim, at www.MMA, that's Mary Allen, as a Merriman Market Analyst. So MMAcycles.com. That's our website. You'll find a lot of information there, a lot of good reading, a lot of articles, and a lot of information on how to get involved with our analysis. And I would say that if you just go to that website, you can join our club, if you will, and we will send you our free weekly market climate. We analyze the market climate from a geocosmic point of view. We have a free weekly column that's on our website, or if you wish to be on our distribution list, we'll send you a copy of that column. It comes out every week. It's very popular. People all over the world read it, and I would recommend it for anybody who's interested in what I had to say today.
And Ray, can you maybe remind people again about your worldwide webinar?
Yeah, that takes place in 2 weeks, February 14th, Valentine's Day. It'll be at, I think it's 2 p.m. Eastern Time, 11 a.m. Pacific Standard Time. It's $55 to join us. It's about 2.5 hours long, and I will cover gold, silver, Bitcoin, stock market, currencies, crude oil, and I'll also cover the political situation in the United States and the world economy and the trends that I see happening there.
Ray, thank you so much for being on This Week in Money.
You're welcome. Thanks for having me. Talk to you soon.
My guest has been Ray Merriman, founder of Merriman Market Analyst, the author of several books on the correlation between market cycles and planetary cycles. His website, MMAcycles.com. And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Eric Hadik, and Ray Merriman. And thank you for listening. If you have any questions for the show or for any of our guests, you can send them to info@housestreet.com. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Golden Arrow Resources President Joseph Grosso. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to Company Showcase, Larry.
Thanks, Jim. I
Just want to state that we had a press release out yesterday that shows we've achieved 99% manganese extraction. Or if you want to use the word recovery, then that means the same thing. So I know there were some questions about that. For myself, I've always used the word recovery, but now that we're in high tech, maybe extraction works better. But anyway, 99% is super. I think the DLA will be happy with that, and we're certainly happy with that. We've got a few things that we want to report on. And as you know, Cometco does all our work. They do an excellent job. I've been with them, I think, going on 13 years. And they've produced some excellent results for me, including the recovery of manganese from low-grade deposits. And that's what we've worked with in the U.S. because that's what the U.S. has. So my old saying of you can't make steel without manganese, and if you can't make steel, the world stops. So that is a big use of manganese, as well as for electrolytic manganese metal and electrolytic manganese dioxide for the battery systems. We've taken both of those projects right through to producing batteries with the electrolytic manganese dioxide and EMM, and that's what we're working on today. I've got a few other things I want to talk about, and one is that there was an article out that was praising Cometco for their work from one of the largest engineering firms in the world called Fluor, and I think that was well deserved. The Cometco group, as far as I'm concerned, are the best in anywhere. They can really get the results. They only have to study it for a while. If they can't get it, they tell you, and if they can, they tell you that they think they can do it. And if they say they think they can do it, I'll get the money for them, and we'll do it. So, because that's my faith in Cometco. Now, still got a lot of this shorting stuff going on. I mean, it's hit the news in big ways now, so everybody's becoming aware of it. I just want to state that in the last 9 days, we've had a lot of information from the shorting in the OTC market. There's been 11 million shares shorted, which represents 52% of the volume for all those days. So that's a tremendous amount of shorting. In Canada, it works out from February the 1st, January to January the 1st, that we have 20% of the volume shorted. That, I think, is, I don't know how they get that, because people don't actually have to report when they're shorting anymore, and I think some do and most don't. So I think we have a huge short position, and but I can't say that with the conviction I'd like to, because there's no way of me knowing exactly what's shorted except watching the markets on my own stock for the last 20 years, and I got a pretty good feeling for what's out there. So it's onwards and upwards for us, and tell you that we're on schedule with the DLA work, and the DLA is paying for that, and we're also working on our recycling program with the morphology, and that is being paid for by the IRAP, the Canadian government. So we're in good shape. A lot of warrants have been exercised, so we've got lots of money in the till. We can move directly. Once we get the results from this latest round of testing from recycling, we can move directly into the flow sheet, the new flow sheet, the new design, and get the estimates we need for the material to be put into the project. So I'd say I'm a happy camper because we're in good shape. We've just about achieved all the goals we wanted to on the recycling part, and there's going to be some developments out of that will put us into an additional category, but I don't want to talk about that right now. It's something that I imagine some of the more astute players out there, the scientific side, have already figured out. But I think that I couldn't be a happier camper, Jim.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metal company, and we are moving ahead with the project of recycling that was spun off of our manganese project, and that patent developed into a new patent, 2 new patents for our recycling process, and that is so that's I guess you'd call it vertical integration, and we definitely have that. And we had a long spell of bad times, and we got over that, and now we're into good times, and the stock is up over 5 times in the last several weeks. So I think that makes all our shareholders happy. But anyway, we are listed on the Toronto Venture Exchange under the symbol AMY. We're listed on the OTC in the U.S. under the symbol AMYZF. And we're listed in Frankfurt under the symbol 2AM. We're very transparent about everything that we do, so if anybody wants to take a deep dive, they can go through our press releases and everything that's on our site, AmericanManganeseInc.com. Or they can phone the office here at 778-574-4444.
Larry, thank you so much for the update.
You're welcome, Jim.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on February 5th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Joseph Grosso, the Executive Chairman, CEO, and President of Golden Arrow Resources online at goldenarrowresources.com. Golden Arrow Resources trades on the Toronto Venture Exchange under the symbol GRG, on the OTC, symbol BKUCF, and on the Frankfurt Exchange under the symbol MAL2A. Joe, welcome to Company Showcase.
I want to thank you for having me.
Joe, can you sum up what Golden Arrow Resources is about?
We work as a company. Golden Arrow is a company that operates in 3 countries. In all 3 countries, the objectives and the work, it's all the same. It's known geology that we advance to come up with the product that we are in business for. Create pre-feasibility exploration projects, which we call it discovery.
Joe, what's Golden Arrow up to right now?
Golden Arrow is currently involved in Argentina, Chile, and Paraguay, drilling 3 projects which are in Argentina and Paraguay are gold, precious metal, and in Chile is definitely base copper area, which is of much interest to us.
Joe, what are the 5 stages you go through from start to finish on a project?
The 5 steps we look forward to become a 43-101 at step 5. At step 5, if we want to continue ourselves to put in more money because we can sell it for more money, we continue with step 6 and so on and so on. We make it bigger, more valuable. Otherwise, at step 5, we say, okay, we're done. We got a PEA, a third party, and who wants to buy it. And so,
Joe, is the company cashed up?
For what we are doing, we are extremely well financed. Cash, semi-cash, and so on. And we, with the financing ability that we have, we can continue our programs of known geology for several years.
Does Golden Arrow Management have a history of successful discoveries?
Absolutely. We have a record of successful discoveries, and they include 3 discoveries that we made. One was the first one, Gualcamayo Gold, which it's owned by Yamana, and it's in production for 8 or 9 years. We have Chinchilla, which is also in production, and SSR Mining owns that now, and continue with the silver production. And the third one is a huge silver project called the Navidad, which means we discovered in the week of Christmas, and so we call it Navidad. This is the biggest silver discovery in the world, which will be put in production by Pan American Silver, and they will have to spend $4.4 billion to put it in production. So, are we successful? Extremely successful.
Joe, how did you end up in the mining business?
Interesting. I come from a family that was in clothing manufacturing since 1782, and I came to Canada to bring with me the knowledge of manufacturing, and we did. And the label that I was producing was a Joseph Grosso label, and we were enormously successful. And we were bought out by an international company, and we had to sign a non-compete so we can go back into our clothing business. But I was living in Vancouver, and Vancouver is well known for junior mining investments, and so I took some of the money and I invested in junior mining, and I liked it a lot until Argentina in 1993 opened up to foreign investors, and we, as most Italian, have immigrated citizens in Argentina, and we have a great number of family which encouraged us a great deal to come to Argentina, which made the change in a new industry right now, mining. We have enjoyed it a great deal, and we do realize that Argentina had no mining when I went to Argentina, which was in 1993, and we had to actually sell it to the government first, second to the people, a small community. We turned them around right now, which have made mining the second best industry nominated by the government.
Tina, what kind of honors have you received for doing that?
Best mining of the year, best company, several credits. You just have to read about us. It's quite exciting.
Is the best place to find out more about Golden Arrow your website, goldenarrowresources.com?
Yes.
Joseph, thank you so much for being on Company Showcase.
I want to thank you very much for thinking of us. So now I can at least talking to you as one of our achievements.
My guest has been Joseph Grosso, the Executive Chairman, CEO, and President of Golden Arrow Resources. You can find them online at goldenarrowresources.com. Golden Arrow trades on the Toronto Venture Exchange under the symbol GRG, on the OTC, symbol BKUCF, and on the Frankfurt Exchange, symbol MAL2A. I'm Jim Goddard. Our conversation took place on February 3rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of Howe Street Media Incorporated.